Good afternoon all, and thank you for making the time for today's Redefining Success webinar. This is another in our ongoing series of complementary education webinars that we regularly provide free of charge for both clients and non-clients alike. For those that don't know me, my name is Jim Bell. I'm the director at JBA. As always, I'm keen to get this information out to you as soon as I can. And with my other team members usually doing some other urgent work for clients, I've decided to present this and future webinars without moderator support. So please bear with me if things go astray. I hope there's a time for questions. Well, there is a time for questions at the end of the webinar. If for some reason I can't get to them, please send me any by email after the webinar and I'll get back to you. Just a housekeeping matter. Can somebody please put their hand up if you can in fact hear me? I'd hate to think I'm sitting here talking to myself without knowing it. Thank you guys and girls, appreciate that very much. For those of you who are unfamiliar with the webinar environment, these are the Zoom settings. Let's take a closer look at them. Select audio settings to select and test your speakers. Submit questions via the Q&A button. I'll try and get to them at the end of the webinar, and click leave meeting if you need to leave at any time. All attendees will receive a follow-up email after the webinar, either tomorrow or Monday, and we'd love your feedback, whether or not you left early. I'd like to kick things off with a thought of the day. Success is walking from failure to failure with no loss of enthusiasm, by the great Winston Churchill. Because of COVID, we're all experiencing disruption and uncertainty at the moment, and disruption and uncertainty, I think, will be the new norm. As we've all had to adapt, no doubt there have been a few learnings for us along the way. Now, a learning is a term which we now at JBA use because we think our biggest learnings come from our failures. Of course, that's not to say COVID is really a failure as such, but the issue is that what we've done in the past may no longer be as successful for us as what it was in the past. So we need to respond to these learnings and reconsider what we are doing now and for the future. Before we get stuck in, I just want to throw in our usual disclaimer that the information in this educational webinar is general in nature and no substitute for tailored advice specific to your particular circumstances. That'll keep the lawyers happy. The agenda, as we always have, starting with success for you, your business and your team, touching on your smart business plan, either a new plan for those that don't have them or an amended plan for those that do, strategies to grow your profit and cash flow, building a healthy business, ensuring sustainable success, and as always, options for further support from us, both on a free basis and for more detailed support on obviously a charged basis. Today, we're going to look at what success now looks like for you, your business and your team, and how planning should reflect this. Success now may well be, and is possibly likely to be, different to what success may have been up to, say, the last 2 years ago. We'll dive into some strategies to grow your profit and cash flow to help you maximize the outcomes for these and to promote sustainable success. Then we'll look at how we can help your business with some free tools for you and some other support options before answering any questions that you might have. Pre-COVID, success may have meant something very different to you than what it does now. For example, you may have had growth plans which have now been disrupted. And we know many businesses that have indeed had growth plans that have been disrupted because of COVID. Given the change that COVID has brought, through our work with clients, we've seen that some people have fallen into the trap of working harder and burning themselves out in pursuit of their success, or even to just tread water. when in reality, there are other ways to, let's say, potentially have your cake and eat it, even in times of uncertainty. So for the purposes of this webinar presentation, we're going to refer to a made-up example business, a gym called The Rock, which is owned by a fictional husband and wife, Dwayne and Jane. Yes, I know, dad jokes, I get them from my kids all the time. Dwayne and Jane owning The Rock Gym. The principles we'll go through, though, are equally relevant for your business, and the aspects that we'll touch on have, in fact, come from examples in real life. So in our example, let's say Dwayne and Jane originally wanted to achieve $100,000 profit, but were working long hours to get there. Not an unreasonable income level and not unusual for people aspiring to achieve that, working long hours. Now they're thinking that more time with family is more important and are wondering if they can achieve that success with a lower level of profit, let's say maybe $80,000. Remember that the business is here to serve you, not the other way around. By redefining what success means to you personally, and it'd be different to everybody, it's possible to build a plan around how the business delivers that to you. Defining what success means to you allows you to define what success looks like for your business. But we mustn't stop there. We also need to define what success looks like for our team. We mustn't forget those really important people that are working for us. A happy and engaged team is not only good for them, it's great for our business too. Now more than ever, we're seeing that success isn't necessarily just about money. Indeed, we often talk about the 3 freedoms that we want businesses to provide for their owners. Mind freedom, can I sleep at night? Financial freedom, the obvious one, and time freedom. Can I actually get some time away from the business? Do I have to do 60 plus hours a week? Throughout this webinar, we're going to flesh out how you can create the new definition of success for you, your business and your team using Dwayne and Jane's gym example. So let's start with your definition of success. In other words, what do you want your business to deliver to you personally? For those of you that have current business plans, you might recognize that we refer to your definition of success in the section of your business plan called What We Want to Achieve. We refer to 4 things here. Your hours of work. Do you really need to work such long hours? Can you spend more time with the family and still get by financially? In our example, Jane would love to have Dwayne at home more to help out with the children. How common is that? Your role in this business is one of the other 4 things. Are there things you do at work that could be done by others to free up your time? Again, in our example, Jane would love it if someone else could do the GST preparation work so she can have her evenings back to watch Netflix. Now, again, how common is that? Thirdly, the cash you take from your business each week or each month. If you reduce your cash demands, your business will be able to survive on lower turnover. Or alternatively, you can employ or contract out to other people tasks that you've done yourself in the business up to now that you don't really want to do. Remember in our example, where the cash demands may have been $100,000 in the past, maybe Dwayne and Jane can bring that back down to $80,000. At least that's what they're going to hope to do. And fourthly, the other measure of success for you is holidays. Where and when and for how long for? So just as it is for Dwayne and Jane, your definition might be quite different now to what it was pre-COVID. In Dwayne and Jane, more time at home, slightly less income, but they can afford to live on slightly less income. The really important question we must all ask ourselves is, what do I need to be happy? Maybe you can get by with less cash from the business, and in doing so, take some work pressure off yourself. Life shouldn't be all about work, staying ahead of the bills, or owning the most toys. A personal budget helps us understand whether or not you can get by on less cash from the business. If you can make personal savings, you'll reduce the cash flow strain on the business. You'll need to take less out. No doubt you've made savings during the various lockdowns we've had. I know I have, because I haven't been able to get out. Or maybe you've changed your spending priorities. And can these savings continue? Hopefully you won't have increased spending online too much though, especially if your business is under pressure. At JBA, we have a complimentary personal budget template that you can use to work out your personal budget, what you actually need to live on at the lifestyle you want. The template ensures you don't miss out on any expenses, and it gives you a really good path and a direction to aim for to achieve that income level and lifestyle, and it's free. Fundamentally, you simply look at your bank statements online to see what you typically spend in a month, go back, say, 3 or 4 months to review them, and ensure that the budget that you put together is realistic. You put the figures into our free template and it shows what you need to live on, and it also shows what you're spending, which in some cases can be a real eye-opener. In our example, Dwayne and Jane have determined that they can make things work on $80,000. Dwayne is going to cut down on what he spends on gym supplements. Don't say steroids, they're not illegal. They're not legal. And Jane is going to go walking with her friends instead of going out for a girls' lunch each week. Together, they're also going to have a camping holiday locally to reduce costs instead of overseas. Although in practical terms for us at the moment, we're pretty much forced to holiday locally anyway. Believe it or not, personal budgeting is a hugely empowering process, and one of the most untapped wonders on how to live a quality life. It's not about cutting back, which is what most people think it is. It's actually about working ways out to be able to afford to have or do what you want. Once we are clear on what success now looks like for us as owners of the business, it's time to translate that into business success. If we go back to our example, in the past, Dwayne and Jane wanted the business to deliver 100K to them each year. Having done their personal budget, they've identified they can make things work at home and for the family at 80,000. I'll show you shortly what an impact this can have on the minimum viable sales level of the business, the minimum sales they need to achieve that. Success for the Rock Gym can then be built around achieving a lower sales level, as they would then need an 80,000 income rather than 100. Alternatively, they could reinvest any savings they make into the business on such things as more support from third parties outside the business to take on part-time people, maybe in marketing or finance or administration, to free up their time to work fewer hours. Netflix instead of GST returns. Let's talk about what minimum viable sales actually means. You may have heard people define break even as the level of sales at which your income equals your costs, what the business needs not to lose money. That's a pretty common definition that we hear frequently about break even. We say not so. In our definition at JBA, we think that break even or minimum viable sales is the level that you need to get sufficient cash from your business to meet your definition of success. In other words, enough cash to live off in the way you want to live. If costs equals sales, which is the common concept of break even, you'll have nothing left to live off, costs versus sales. So we need to build into our break even thought process the earnings that we want to live. And if we can achieve those earnings and those expenses with those sales, then in our view, we've broken even as to our lifestyle. In our example previously, Dwayne and Jane, they had their plan to achieve 100,000. Their overheads 125, and that means their gross profit needs to be 225,000. If they have a gross profit percentage of 50% in their gym, that's what they need to get that 125. Then their annual sales needs to be 450,000 to achieve those numbers. If they're only open 46 weeks of the year, then the break even on minimum viable sales level is roughly $10,000. We always round numbers up to make them just, or down, to make them just clear for discussion purposes. Let's then look at their revised plan with $80,000 as the profit. If overheads stay the same at 125,000, then they need a gross profit of 205,000 at the same 50% GP percentage. So the revised annual sales and minimum viable sales are 410,000, which is actually 9,000 now, not 10. Easier to achieve. So with a new plan to invest an extra 20,000, our support with marketing finance, things that Dwayne and Jane don't want to do, that could result in a slightly increased gross profit percentage of say 2%, and they can still get by with those figures with that 10% reduction in sales, 9,000, not 10. So as you can see very quickly, very roughly, don't worry too much about the maths and all that sort of accountanese behind that. Basically what I'm trying to show is that even once you know what you need to achieve the lifestyle you need, you can actually achieve it without working quite so hard if you plan. I mean, that's got to give you a better lifestyle, because in this case with Dwayne and Jane, 80,000 in their income, they only need to find 9,000 a week instead of 10. They're working less hours. That gives them a better lifestyle. Other people are doing some of the work they once did, and they can now afford to live on 80, not 100. Their business works for them, not the other way around. They now work to live, not live to work. So once you've worked out what your minimum viable sales level is, or your turnover level, it's time to put some goals together to achieve those numbers. We've worked it out. How do we get there? Using our example before, Dwayne and Jane need to set some SMART goals about how to achieve that $9,000 sales figure. An example might be, say, attracting to, say, 10 new gym customers per month. We can then create specific actions to achieve that goal. Specific, measurable, achievable, relevant time. SMART action, SMART business plan. This forms the basis of the wider plan that you put together. So what we've said to date, let's have a look and see how that all flows through into what we would call our business plan. At the gym, Dwayne and Jane have defined their core purpose, or why their business exists, as helping you become a true badass. For those of you who know Dwayne "The Rock" Johnson, on the right-hand side of this slide, you're probably going to see one or two of his most famous quotes. For those that don't, they probably won't mean a hell of a lot. Dwayne and Jane want the gym to be associated with their vision of personal health. Healthy people, they want you to become a true badass. Their definition of personal success, as we know, is defined in the what we want to achieve section, $80,000 profit. Jane also wants to reduce her hours by delegating marketing and finance, the GST returns, and Dwayne also to reduce his hours and have them together at home as a family more often, and also to have a family holiday. They've done their personal budget, as we've just seen, and this is where it all sort of dovetails in and comes together. And we know that they can achieve their personal definition of success with the $80,000 income or profit. And that translates to $433,000 worth of sales, which we calculated earlier. So the high level budget gives us the key performance indicators to achieve that. So if you see on screen on the middle of the left-hand side, you can see within this section their minimum viable sales level, otherwise known as the gross revenue target, 433,000, and gross profit percentage, as well as increasing the number of inquiries per month and conversion rate, are all noted in the key performance indicators areas. They also need to monitor their member retention rate and the average amount members are spending, because mathematically these things together work through to see whether they are achieving their budgeted figures. So you can see the KPIs that we've just got listed there are critical to measure, and they link to opportunities and vulnerabilities that a business has. And businesses all have opportunities and vulnerabilities right throughout their businesses. So these things link to that too. And it's important, therefore, to have a measurable indicator so you know if you're on track to achieve your vision of success. Now, you might not use 6 key performance indicators. You might only use 2 or 3 of them, but most businesses should have some form of KPIs, knowing what they need to hit. In this example, a minimum of 9K per week. And if they're hitting that, they know they're going to be hitting their gross revenue target of 433. The second page of the business plan records the goals for the year and then breaks them down into 90-day or 3-monthly goals and actions. The minimum viable sales number and the gross profit margin have been converted into SMART annual goals. $9,000, as we can see, is the 1-year goal per week for achieving the figures that we need to. The first 90 days is all about the actions Dwayne and Jane will take to ensure they have a robust system to measure if they're on track to achieve their goals. So in their case, they need to put, or even if they have one already in place, make sure it's robust enough, a management reporting system in place to report on the KPIs. It's super important here that the plan becomes a reality and doesn't sit in the bottom of a drawer. It's a living document, and I use my one at JBA all the time. It sits on my desk. I don't look at it daily, but it sits on my desk, and when I do tend to look at it, it keeps me on track in terms of just the major items. Don't sweat the small stuff, but the big stuff. Our business plan, when we prepare them, just as you're seeing now, is geared to your goals and the steps you need to take to achieve those goals. This is unlike a bank's business plan. So this is where people sometimes get confused. A bank's business plan is there purely for the bank to see if a customer can repay what the bank lends them. That's no good to us. The business plans we want is a business plan to show the steps you need to take to achieve your goals. And as I always say, a goal without a plan is just a wish. The other 1-year goals all link back to how the business can deliver on Dwayne and Jane's revised definition of success, about reduced hours and the level of personal spending. It's important looking here to see that the changes Dwayne and Jane are making might not have immediate results on cash flow. They might not immediately affect cash flow. For example, they're going to spend the first quarter contracting a person and outsourcing their finance responsibilities. So they won't have any positive cash flow as a result of that. But if it's planned properly, they won't have any negative either. So you'll see a 90-day goal here to reduce debtor days from 32 to 22, which will give them much needed cash injection within the next 90 days. Now, debtor days are the number of days it takes for you to get your money in. The longer the number of days outstanding, the longer debtors are, the less amount of money you've got coming in. Ideally, the faster or the lower the number of debtor days, the faster the money's coming in, faster cash comes in. So we've talked about your personal definition of success and how to reflect that in your business plan. So your business plan can achieve the level of success you need it to so that you can achieve the lifestyle you want. It's funny that this happens to be JBA's core purpose too. Our core purpose is actually not to prepare tax returns and financial statements. That wouldn't get me out of bed in the morning. It's actually to help our clients achieve their business potential so that they can live the lifestyle they aspire to. At the same time as understanding and aiming for those lengthy definitions or lengthy desires, It's important to look at the here and now strategies to grow profit here and now and to improve your cash flow so that your business can keep up with producing enough to not only achieve your lifestyle, but to maintain your lifestyle. We refer to a traffic lights analogy here. Often there is just as many things you need to stop doing, the red light, as there are that you should continue doing, the amber light, and that you should start doing, the green light. For example, a red light activity might be to stop working for customers who don't pay you or don't respect your core values. Or you might want to stop doing your own GST returns as it impacts your evenings, just as Jane has decided to do in our example. An amber light activity might be to continue revising your prices, and you should all be doing that, to reflect any price increases in costs you're experiencing from your suppliers. And a green light activity might be to, say, update your personal budget and or business plan and start regularly monitoring your results against your plan. So if any of you have got a pen and paper handy, which I hope you do, please write this down because this is a really biggie, I think. What you can say yes to is defined by what you say no to. Remember, your revised definition of success is about you working smarter, not harder. So we're going to go into a little bit of numeric ease at the moment. Don't worry too much about it. I'll refer you to a couple of points within the what we call the growth equation, but it's an equation we use from a client on a one-to-one basis. But I hope you'll probably just see, if you can see the numbers I'm referring to, just the idea gives you an idea. Don't worry about the maths as to how we arrive at it, but you'll see the concept is really where I'm looking at that. So the growth equation, we've got old and we've got the new, old being what they were achieving and new what they're wanting to achieve. So the growth equation focuses on profit. In our example for the Rock Gym pre-COVID, Dwayne and Jane had plans to grow their profit from $76,000. Have a look at the about middle of that screen, top middle, to $100,000. Well, it's actually $99,800, but we round it for discussion purpose. So let's look at how they were going to get to that profit. But be aware we've simplified our concepts here by calling one annual membership one transaction per year. The reality is that any member or each member in the gym may have multiple transactions on each visit, buying food, drinks, that sort of thing. But for simplistic purposes, for today's exercise, we've acknowledged this by showing an increase in the transaction value. So we're not getting too deeply into the mathematics. So in Jane and Dwayne's case, they were planning to lift client retention by 5% from 80 to 85%. They were planning to increase leads to 10 per month, which is 120 per year. They were planning to get better at converting those prospective customers and lift average transaction value by 50 from 750 to 800. And you'll see these old and new figures in that document. They might have done that by encouraging customers to buy a drink after each session or something of that nature. In practical terms, we go through that with clients to see if we can actually give realistic opportunities to achieve these things. To drive growth and check they were going to state a plan, they've allowed for additional marketing investment. And you see that in the bottom right-hand corner under expenses. They've also engaged their accountant to help with planning, forecasting, reporting. So expenses are planned to go up $20,000 for the year. Now here's our example for the Rock Gym reflecting what we had as plan 2. This was the second smarter plan of getting to that $80,000, or in this case, $79,297. Dwayne and Jane's new plan to get to 80,000 as opposed to 100,000, and because of the current climate, is going to change. Customer retention will actually drop 5%, not increase by 5%, which is what they wanted. Therefore, if we put in a plan to strive for growth in retention to 85%, that's no longer realistic. Equally, they still plan to increase leads to 10 per month, but recognize it will be harder for them to lift their conversion rate. Things are tougher now. So in our example, we've kept the conversion rate unchanged as opposed to the 5% increase we had in the slide just before. They now only need to lift the average transaction value by 40 in this slide. It was 50 in the earlier one. And they're still going to revise their prices for food and drinks. And by doing so, they may increase their margin by 2%. So while we're playing around with numbers here, the effect of this is that they are going to achieve their new $80,000, even though they're in harder times and they've had to make different changes than what they did in the slide previous to achieve it. To make sure they stay to their plan, they can still afford to engage their accountant and their marketing people with forecasting and reporting. So in this example, the expenses are still $20,000 up like they were in the previous slide. So while that was really numbers thrown at you, as I say, please don't get too bogged down on the numbers as such. What I was trying to demonstrate there was that you can still achieve your redefined success even in difficult times by making changes in other areas, not necessarily changes that you had planned to make, but they need to be looked at. They don't just happen by themselves. So let's now have a look at how some small changes to cash flow can also help what, say, Dwayne and Jane were trying to achieve and what all of us were trying to achieve. Ultimately, cash is king, and you want cash or your cash conversion cycle to be as short as possible, how quickly cash can get into your business. The more cash you have in your business, the stronger, more resilient your business will be. Cash is king. Technically, though, and this is for perhaps those that understand their balance sheet a little bit, if you increase cash by collecting debtors faster, your net assets don't actually improve. You don't actually create any more wealth as such on your balance sheet. Debtors goes down and cash in bank goes up. You still have the same net assets. However, the key to this is the higher your debtors are, the more risk there is of non-payment, and particularly in today's society, particularly since COVID as well. The quicker you can convert your debtors and stock into cash, the better. Common sense, I know, but people don't always look that fundamentally at their business. They're too busy running their business rather than looking at the business. I always say that cash to your business is like engine oil is to your car's engine. Without it, it seizes up. Keep coming back, cash is king. Some things you can do as well as increase the debtors collection, right? If you can negotiate better terms for payment of your suppliers, you can preserve your cash flow for longer. But today, please be careful with that though, because in the current economic climate, slow payment of suppliers puts a real drag on the economy, and we all need the economy to keep moving. What's important, I guess, then is to come to an agreement with suppliers, perhaps. For example, you might agree that you can only pay when you've sold the item to your customers, or maybe pay over 2 tranches rather than one on the 20th month following, or whatever. Also, to help cash flow, you must also look at how long it takes for your stock or work in progress to be invoiced. Again, and we've seen it with some clients, they finish a job, get onto the next one, and they don't yet do the invoicing, they wait till the end of the month. Again, the quicker you do your invoicing, the better, because the quicker you're invoiced, it stays in debtors, but then the quicker the debtors get repaid, it comes into cash. Consider whether you need to hold as much stock, or if you can issue progress invoices or reduce the number of jobs you have on the go at once. All these aspects need to be looked at in terms of preserving and improving cash flow. Make sure you're also keeping a close eye on how long it's taking for your debtors to pay you. Point I made just a moment or two ago. There are many things you can do to get paid faster, like, for example, updating your terms of trade and telling all your customers of those updated terms of trade and being rigid by them. If you expect to be paid on the 20th of the month, then that's in your terms of trade. 7 days, it's in your terms of trade, and follow it up. Automated or repeating invoicing. Xero and other software products these days can produce repeat invoices or automated chase up invoices. Simply chasing up your slow payers with systemized processes, or even a credit manager should get your cash flow improved. So let's look at some examples based on going back to Dwayne and Jane's gym. At the Rock Gym, debtors are normally $35,000, as Dwayne and Jane have been too busy to chase up the slower payers. Monthly subscription payment reconciliations aren't being done, and some members move on without paying their outstanding balances. Pretty poor cash flow management. With sales at the current level of 402,000, it means it's taken an average of 32 days for debtors to pay. And that's just a mathematical formula between 402 days and $35,000. Now, even though their terms of trade is 7 days, debtors taking 32 days is crippling their business. They've based all their workings on 7 days. They need to speed up the debtor collection. So immediately a plan is needed to fix this problem and bring some much needed cash into the business. They've met with their accountant for a one-off cash improvement meeting, or whatever you want to call it, and they've identified clear actions to take. The new plan has a target to bring debtors down by 10 days to 22 days. To do this, it was agreed in their cash improvement meeting that they'll check if each member is up to date when they sign them into the gym. As a guy walks into the gym, gives his card over, they'll check the account to make sure he's fully paid up. If not, they'll ping him. They'll start phoning and emailing overdues. They'll be monitoring results as part of their monthly management reporting service. By doing this, the debtors are expected to reduce to $24,000 from $35,000 per month within 2 months. This will free up over $10,000 in cash right when they need it most. So it's working on the business, not so much in the business. Now that we've redefined success for Dwayne, Jane, and their business, let's turn our attention to doing the same for their team. On a basic level, your team's needs are very similar to your own as business owners. They need security over what their hours are, some flexibility where possible to have a balance that supports a happy and healthy lifestyle. They need security over their salary or wages, and clarity of where and when they can take holidays and other perks that your business may offer them. Your people are your greatest asset. With the risk of burnout higher now than ever, and unique pressures on the job market causing a severe shortage in workers, never has it been more important to support your team to have success in their roles and in their private lives. This diagram is based on content from somebody called Vern Harnish, well known in economic circles. I'm not an economist, so I only know of him very briefly. However, there are 4 decisions driving growth in every business: people, strategy, execution, and cash. We've looked at how Dwayne and Jane can execute a better strategy or plan. This is how they'll set the vision and focus for their team. One of the key decisions focuses directly on people, because it's crucial and critical to attract and retain the right people. Oh, bear with me, sorry, technical. Technical problem, user error. The team, getting back to the team, that Dwayne and Jane, their team also contributes in the other 2 remaining areas of the decision factors that drive growth: execution and cash. The team's critical. Their happiness, including their overall culture of the business, is important as the strategy itself. Now let's look at the 4 disciplines of a healthy business. The 4 disciplines of a healthy business: cohesive leadership, create clarity, over-communicate the clarity, and reinforce the clarity. It's all about clarity. It starts with developing a cohesive leadership team. Dwayne and Jane in our example, and indeed all business owners, this all equates to a leadership team that has built trust, achieved commitment, embraced accountability, and are focused on results and focused on their team. You need to create true clarity for your employees, for your team. There are 6 elements to clarity. Why your business exists, also known as your core purpose. As I said before, JBA's core purpose is to help our clients achieve their business potential so they can live the lifestyle that they aspire to. How your business behaves. This can be defined by your core values. What your business does relates to how you deliver on your purpose. How your business will succeed is what you've recorded in your business plan. You're working towards that plan. What's important right now are the 90-day actions you've identified in your plan. The next 90-day actions are always the most important. And who must do what it is recorded in your plan and when they must do it by. These elements of clarity not only help your team better understand the plan or the game plan or their approach to their work, but they provide cultural guidelines to the firm. They uplift workplace environments. They ensure every team member is a team player and on board with what management, the company, are trying to plan together, are trying to achieve. On the flip side of all this is that every time a team or team member is distracted or disrupted by confusion or internal conflict that is not constructive, it actually eats into your productivity and your bottom line. So clarity over what success looks like for your business is the first step in creating a great company culture. Your team want to see how their role and responsibilities are connected to your vision of the company, how they're helping to make an impact. Then as business owners, we just over communicate that clarity and reinforce it. We keep telling our staff members why and how they're helping our customers achieve what our customers want to achieve, or in Dwayne and Jane's case, how the customers become true badasses from their gym. Now that we've addressed those sort of highfalutin things, for want of a better word, those conceptual things, as business owners, what can we do to set our team up for success in their roles? This is perhaps a little bit more practical. How can we support our people's individual successes? Well, individuals thrive individually. What I mean by that is we're all different. While the status quo may work well for many of our team members, we should recognize that everyone has a different ideal working environment, or what they aspire to, or what they feel is important to them. So where possible, offer things like different start or end times and remote working arrangements. Some people do their best work early in the day or in the evenings. So there are benefits to your business in doing this. We're seeing that this is becoming more and more commonplace. You can consider offering shorter working week for the same pay. I mean, there's a lot of talk about that at the moment, and this too is becoming more and more common. And we've seen businesses we associate with ourselves at JBA doing this. The data that we've seen tells us that people who work fewer hours are less burnt out, are more productive, and are more loyal to their employers. I guess it takes some degree of risk or some degree of confidence to do this, but those that we've talked to that have done it have actually, unless they're telling a few porkies because they're embarrassed, are telling us that it's actually working very well for them. Or another example of looking after your team is perhaps throw them a long weekend on you, give them a Friday or a Monday off from time to time. Again, I've seen numbers of businesses do this over the last few years. But if you do this, give people plenty of notice so they can maximize that time, so they can plan to go away or book a hotel somewhere, or do what they need to do. As employers, as business owners, we need to be employers of choice, because the cost of recruiting new team members far outweighs investment in our current people. It's far more expensive to replace them. We can encourage study or give it other extended leave options also. That's a great way of demonstrating our commitment to our people and to their passions outside of work. And sometimes they will come back with added value to your business. I mean, we have given staff members or team members in the past paid leave for exams, that sort of thing, and they've come back more qualified and better for our business. We're really conscious, and I'm sure you are too, that we actually want our people to have a life outside of work, and this ensures they're fresh, motivated, productive, and have had what we sometimes call blue sky thinking opportunities, which could lead again to valuable innovation in our business. So other practical aspects to that are to ask your people to let you know what matters to them and how you can help them work around the other things in their life for an overall better business for you. Measuring team member success used to be salary and job title, and that was the old adage. But we think that the definition of success for most people has shifted. It could be said that the younger generations are perhaps leading the way in how we value work in the greater scheme of our lives. You can see in that example, job title, salary, sure, but free time, liking what they do, physical and mental health, really important now, not looked at 5, 10, 15 years ago. So being a flexible employer and helping our team achieve better balance is a win-win. It's a win for them and a win for the business. So ensuring sustainable success for your business. We've covered off on how to redefine success for you, for your business, and for your team. We've digressed a wee bit and used an example of Jane and Dwayne to try and show in practical terms that changing success still, or changing definition of a success still can result in success, even if the numbers are different, providing that the steps taken to achieve those numbers are planned, thought through, measured, and managed. We don't necessarily need to earn the 100 grand and to work 80 hours a week if we can get it by with earning 80 grand and working 40 hours a week and live a better lifestyle accordingly. So let's now talk about the resources we have available to help you ensure your sustainable success. Here's some suggestions. Put the oxygen mask on yourself first and do a personal budget to see how you can make some savings. I can't underestimate how important that is to do. I also can't underestimate how so few people do it. It really is a golden nugget in improving your financial wealth. You can complete our Sustainable Business Success Worksheet. All these are free resources from us. You just ask for them. You can send your team our team member reflection questionnaire to see how they're doing, how they're coping. If you'd like us to send you any of these resources, just let us know in the feedback email you'll get a day or so after the webinar. For those that need more support than what we've just talked about, more handheld, more closely buddied up with us, our recommended strategy is to work with us and complete an updated business plan if you've got one, as we would have hoped most people would have had already. And we're receiving great feedback about how helpful this process is for nailing the new strategies and providing clarity for people. But if you don't have a business plan, now's perhaps a good time to do one. There won't be any sort of rehashing of plannings, but there might be rehashing as we go through the process of your definition of success and what you want and need to achieve out of your business. This business plan or discussion initially will be a great foundation to which your cash flow improvement strategy could be built to. And we touched on bases, a few things in terms of improvement cash flow just some moments ago. Incidentally, and as an aside, and not a particular reason for doing a business plan, but they do help with loan applications if finance is needed. Banks have taken them on board, even though they are quite different to the types that banks want. That said, they still require their ones completed as well, but they do make a good start point for the banks. When we do carry out a business planning session for clients, they can be done as one 4-hour face-to-face session together once lockdown is over and we're back working in the Newmarket office as we have done for many years. Or we can do online sessions, but we would do two-hour sessions to do that. Online meetings are just that much harder. We think also, as well as a business plan, and all of these strategies together, we think are the best. Of course, are the Rolls Royce. They can be dealt with independently depending on what you feel and what your business needs. But we certainly feel that all businesses should have a cash flow or financial forecast. It's important to know what you think is going to be happening with your cash. You can go to the bank then and get increased overdraft facilities for a period, and perhaps if you're lucky enough to have cash excesses, you could then put them outside of the business so they're safe, and that sort of thing. So cash flow forecasting is important, not only for those businesses which are struggling, but for those that are making money too. If you need a bit more help to improve your cash flow or your profit, we can sit down with you too and go through that growth equation properly, not just as I quickly whizzed over it, 10 or 20 minutes ago, so that we can actually adapt it to your personal circumstances, and we can identify strategies to improve profit and cash flow through that. That said, if all that, again, is stuff that you can do yourself, and you do, and you've got some good handles on your planning, but you're not so good at following through with a lot of that, or measuring, I recommend perhaps you look at some management reporting, monthly accounts, either in-house from your own systems or from us. Either way, produce those monthly accounts and look at them. Don't just stick them in a drawer. You can then regularly monitor your results, and you can be held accountable for achieving those goals. One way of being held accountable is our popular quarterly momentum sessions. They are getting more popular, and they keep clients on track. Clients meet with us every 3 months to see how things are going and to plan the next 90 days actions to keep on track. And if they've got their monthly accounts and what have you, and have done a cash flow, for example, we can compare how they're going from their measured accounts to what they had planned to do, and see what changes might be necessary. If all of that is relatively complex and you're not sure where to go and where to start, and you're not sure where the best way forward is, or you just want to talk to us about where to start with this stuff, about where we can work with you, we can quite happily recommend a complimentary meeting to discuss your own goals, your current problems, any current challenges. From there, we can work out together and agree the best way to support you. Now, we know that the benefits you'll get from these services will be far greater than our fees charged. Most importantly, it's about our helping you as quickly as possible and ensuring we're working with you to achieve the success that you, your business, and your team want. There's quite a bit for me thrown at you, a little bit longer than I wanted. Questions? None have come in, which doesn't surprise me. I suggest perhaps the numbers probably threw a few people here. I apologize for that if they did. What I'm really trying to do is get through the concepts to you in terms of changing the importance of what is success to you today compared to perhaps what it may have been 2 years ago, and how we can achieve that success. Given that it's Friday afternoon, and I don't want to bore you even longer than I have, before I go though, I thought I'd share this quote with you. Nothing is so contagious as enthusiasm. Make a simple plan today. Commit to at least 3 actions that you will take of being here today. Find 2 or 3 things that resonated with you. Commit to them. Write them down. Give each of them an owner. It might be you, or it might be somebody in your firm that you feel that is best placed to deal with that improvement part of your business. And also put a completion date there too, so that you become accountable, and have a look at it. Have you completed it by when you wanted to? This is a worrying time for many, I know that, but you needn't worry alone. There's a ton of support out there, not just with us, and there's more to come, though, from others and us. So thanks for making the time this afternoon to attend this webinar. We appreciate that your time is very valuable right now. And so I hope I've given you a few ideas to think about and some clear options of how you can support yourselves free from us, and how we can support you whichever way you feel you need. Probably tomorrow, or maybe Monday, given that it's Friday afternoon, you should receive a follow-up email from us that we'd love you to provide a brief bit of feedback on, so we continually improve and get an understanding on what other webinar topics you'd like to see from us in the future. We can only improve our support of you if we know what you want as well as what we think you need. At the moment, I accept that we are reasonably COVID driven in terms of a lot of the things that we are putting out to the masses, because that is perhaps the most important thing at the moment. Keep a lookout for our ongoing complimentary education webinars. There are plenty of places to register for them, from our direct mail advertising by MailChimp, from the footer on our standard emails, from our Facebook page, Twitter page, and from our website. For our direct email outputs, we use MailChimp, and some of those MailChimps go into spam folders automatically, or in Gmail, they go into promotions inboxes. So regularly look into those folders for those mail outs that may have gone there. We also send out our newsletter information and other things by MailChimp, so it does pay to check those folders for not just webinar information from us. Also, please feel free to invite others to our webinars who you think may benefit from our presentations. You can send email invitations or links from wherever you get them from. Our webinars are for clients and non-clients alike, the more the merrier. But for now, guys, that's me done. Thank you for your time once again. I hope I've given you some ideas and some thoughts for improving your businesses. Have a great evening and have a great weekend. Bye for now.